In the last video, I touched on a new investment strategy you could share with your more affluent and sophisticated clients. And if you're a CPA or a tax professional, you really want to keep your ears open for this information. Hi, I'm Dick Shelton, and in this video, I'm going to try to quickly break down what a life settlement is and why someone would even sell their life insurance policy. Now, in the last video, I told you I was going to share what some of the pros and cons are, but before that will make any kind of sense, let's get into what a life settlement actually is. As you know, mortgages and real estate deeds are assets that can be bought and sold. People do it every day and we don't think it's strange. They're considered saleable assets. Well, much like that mortgage contract, a life insurance policy is also a contract. It's a contract between an individual and a life insurance company that says as long as the insured pays the bill, the insurance company guarantees payment of the death benefit. You know, there's a growing number of retirement age baby boomers who at one time thought it was wise to purchase a life insurance policy to pay a very large amount of money to their loved ones in the event of their death. The difference was these were huge policies. Perhaps they were very wealthy, or they were a key person in a company, or for some reason needed a very large policy. It may have been $1, $3, $5, or even $10 million policies. But now that individual is much older, perhaps widowed, retired, the kids are all grown, and putting thousands of dollars a year into a life policy that no one really needs anymore is not considered the wisest use of their funds. Now, perhaps they've got health conditions that require the full income now, whatever. There's some valid reason why letting that policy go right now is the right thing to do at this stage. The problem is that if they let go or surrender that policy to the insurance company, they'll get far less than all the money that they put into it over the years. Well, that's where selling the big life insurance policy comes into play. A life settlement is a transaction where a life insurance policy owner sells the ownership in their policy. Their life is still insured. There still will be a payout on the policy when they eventually pass away. But the difference is, by selling their ownership of the policy, they can receive now far more money than what they could get by giving it back to the life insurance company. However, as much as it is, it's still far less than the death benefit. So if Warren Buffett buys it, the person who Warren Buffett wrote the check to is happy, and Warren is happy because while he may have paid this person $600,000, he will receive $5 million when the insured does pass. He just bought a future asset at a discount. Now, the investor can be an individual or a private equity fund, or even a bank, or for that matter, even another insurance company. They maintain the policy, pay the additional costs to keep it going, such as annual premiums, and then they simply collect the death benefit when the insured passes. Now, there's several factors that go into account to determine how long the investor will hold on to the policy and who can purchase it, and I'll go into that in another video. But it's important to know that all of this is legal and that there's a very safe check and balance system in place to ensure that it's all done properly. Stay tuned for my next video where I'll go a little deeper into life settlements, how they came about, and how that can translate into a lot of protected, safe money for your clients. Now, don't forget to check out the explanation video website that tells a lot more about it at growyourcommissions.com. Also, for more information like this video, please subscribe to my library of videos by clicking on the subscribe button right over there. And you can view the next video right away by clicking right over here. Have a great day, and we'll be talking to you soon.